Hey everyone, welcome back to Corporate Decoder. Today, S.I.M Acquisition Corp. I just filed an 8K and I'm seeing one red flag that matters. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is extending its deadline to find a business to merge with, and a lot of shareholders are cashing out. So here we are looking at a Form 8K filing from S.I.M Acquisition Corp. This is basically a report filed when certain significant events happen with a company. The key date here is May 7th, 2026. This is a special type of company called a SPAC, which stands for Special Purpose Acquisition Company. Think of them as a shell company that goes public to raise money with the sole purpose of acquiring or merging with an existing private company. This filing tells us about some important changes. First off, the company is extending the time it has to find a business to buy. They were supposed to do this by the 11th of July, 2026, but now they have pushed that deadline to the 12th of July, 2027. This is a pretty common move for SPACs that are having trouble finding the right deal. Now, when a SPAC extends its deadline, it usually means they are not confident about finding a good merger target within the original timeframe. This often leads to a lot of uncertainty for investors. And speaking of investors, this filing also details a significant number of redemptions. What this means is that a lot of shareholders decided to get their money back instead of waiting for the company to find a merger. On May 11th, 2026, nearly 22.5 million shares were redeemed. That is a massive amount of money, totaling over $242 million cashed out. When almost $250 million leaves a company like this, it is a big deal. This shows a lack of confidence from the shareholders in the company's ability to execute a successful merger. It is like a vote of no confidence. After all those redemptions, the number of publicly traded shares remaining is very small, just over 500,000. This means the company is now much smaller in terms of its public float. The decision to extend the deadline was put to a vote by the shareholders. The proposal to extend the combination period passed with a significant majority of votes in favour. However, it is important to note the votes against it, and the large number of redemptions that happened alongside this vote. Here we see the voting breakdown on extending the deadline. Over 20 million shares voted for the extension. But what is more telling is the over 5.9 million shares that voted against it. This indicates a clear divide among the shareholders. They also voted to keep Smith Brown PC as their auditors. This is pretty standard procedure and doesn't reveal much about the company's core business prospects. The filing also lists exhibits which are supporting documents. The most important one here is Exhibit 3.1, which is the actual amendment to their governing documents that allows for the extended deadline. And finally, the report is signed by David Kutcher, the Chief Financial Officer. This confirms the filing is official. So, what is the story here? S.I.M Acquisition Corp. eyes a SPAC that is running out of time to find a merger target. They've successfully extended their deadline, but this comes at a cost, a massive amount of money. Over $242 million has been cashed out by shareholders who clearly lack faith in the company's ability to find a good deal. This is a strong signal of a SPAC that might be struggling to fulfill its purpose. Historically, SPACs that face such high redemption rates and extended deadlines often have a tough road ahead. It is not uncommon for them to eventually liquidate or end up in a merger that isn't particularly beneficial for the original investors. Think of companies like Bed Bath & Beyond or Tupperware, which have faced significant challenges and investor skepticism. When a S.I.M Acquisition Corp. has this many shares redeemed, it is a major red flag raising concerns about its future. For instance, if you had a hypothetical $1,000 investment in a similar situation, you might have seen that value significantly erode as the company grappled with these issues, potentially dropping hundreds of dollars, if not more, as the deadline loomed without a deal. The small number of remaining public shares also makes the stock more susceptible to volatility. The risk I am watching is whether they can find a viable business combination before this new deadline expires, given the clear lack of investor confidence demonstrated by the redemptions. What I am actually looking for is a significant positive development in their merger search, which seems unlikely given the current situation. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this breakdown helpful, smash that like button and subscribe for more. Join our Discord for more discussions.